If you're watching this, chances are you're not brand new to trading. You know what a candlestick is. You know what risk to reward means. You've probably watched hundreds of hours of content. And yet, your results still don't match your effort. That's not because you're dumb. It's because smart traders fail for different reasons than beginners. And nobody talks about those reasons honestly. Section 1: The most dangerous stage in trading. There's a stage in trading that's more dangerous than being a beginner. It's the stage where you know just enough to be confident, but not enough to be consistent. At this stage, you don't blow accounts instantly anymore. You survive. You scratch. You almost make it. And that's the problem. Because almost convinces you that you're close. So instead of fixing the real issues, you keep adjusting things that don't matter. You tweak entries. You change sessions. You add confirmations, but your results don't stabilize. Because your problem isn't knowledge. It's execution under pressure. Section 2: Why intelligence works against you. Smart traders overthink. They see more possibilities than they should. Every candle becomes a debate. Every loss becomes a theory. Every win feels like proof that they should push harder. Intelligence creates flexibility. And flexibility destroys consistency. The market doesn't reward intelligence. It rewards repeatable behavior. That's why some traders with less knowledge outperform traders who know everything. They aren't smarter. They're just more constrained. The real reason most systems fail. Most trading systems don't fail because they don't work. They fail because they're not defined tightly enough. Vague rules feel freeing. But vague rules invite emotion. If the market looks good, if momentum is strong, if price reacts, those aren't rules. Those are invitations to second-guess yourself. Real systems remove interpretation. They tell you when not to trade more clearly than when to trade. Most traders never build that level of structure. And then they wonder why they can't trust themselves. Section 4: Why motivation never lasts. Motivation feels powerful. But motivation is emotional energy. And emotional energy is unstable. That's why motivation spikes after wins and collapses after losses. Professionals don't rely on motivation. They rely on rules that operate when motivation is gone. If your trading depends on how you feel that day, you don't have a system. You have a mood-based strategy. And moods don't compound. Section 5: What actually changes results. Consistency comes from three things only: one model, one session, one risk framework. Not because the market demands it, but because your psychology does. The more decisions you allow yourself to make, the more opportunities you have to sabotage progress. The goal isn't to trade more. The goal is to remove yourself from the equation as much as possible. GhostFX was built around this exact problem. Not hype. Not motivation. Structure. Risk control. Repeatable execution. If you're tired of being smart but inconsistent, and you want a framework you can actually follow, GhostFX is open. Link is in the description.